Hello, and welcome to this evening's event. My name is John Bykowski. I'm here to help moderate the panel tonight, moderate our special speaker tonight. I'm here to look at your questions and pass them on, and any kind of feedback you might have to our speaker tonight. And I'd like to first of all thank Ryan for being our producer tonight. He's done a great job. He heads up our community efforts, our local chapter networks, our investor conferences, and as well as these online events. And he'll be monitoring the questions panel for any kind of technical difficulties you might have. So please like to welcome our very special guest tonight, Wayne Thorp. Wayne is the head of research and analysis product development here at the association. He's been a longtime contributor. He writes on many topics. He probably has a specialty or a focus on stock analysis and stock valuation. He heads up the Stock Superstars Report new investment newsletter. And tonight he'll be giving us a lowdown on how to make use of the portfolio management tools that we have on our website. Welcome, Wayne.
Hello, John. How are you today?
Doing very good, thank you. Before we get started tonight, anything you'd like to give us as a heads up we should look forward to tonight? Anything in particular to keep an eye on?
It's just I'm excited about the fact, my portfolio was an endeavor by AAII to, create an in-house portfolio tracker, something that allowed us to offer a level of customization that we couldn't provide with our third-party provider, and also allows us to integrate with a lot of the data and other tools that we have at our website. So, I think this was some of the enhancements we've rolled out over the last couple of years. This is definitely probably one of the biggest improvements and member benefits that we've offered our members in the last couple of years.
That's excellent. Looking forward to the presentation. But before we get started, I just want to remind our listeners and viewers tonight that we are recording tonight's session, and tomorrow you'll be getting an email with any kind of links of things that are mentioned tonight, as well as a link to the recording of it. And actually, for our old timers out there, I could see just above your head, Wayne, a neon sign. I think the Tip Top Tap Hotel. So we're not being joined from the top of the elevator tonight, but our viewers at home can see the Tip Top Tap and the Elton behind you. So with that, please, Wayne, take it away. I'm going to fade to the background here, but I'll interrupt any kind of important questions that might come up.
Well, thank you, John, and good evening and welcome, everyone. For those of you that might have been viewing my presentations over the last year or so, you might notice that I am in a different venue tonight. I'm actually joining you from John's office in downtown Chicago. I had some projects I had to work on in the office, so I had to venture from the far western suburbs and the cornfields of western Illinois down to the city. So thank you, John, for allowing me to use your office this evening. But yeah, good evening and welcome to tonight's open house. For the next hour or so, I'm going to be walking you through some of the features of AAII's My Portfolio tool. As was mentioned, John will be monitoring the questions that will be coming in from viewers, and he'll be feeding them to me both during and at the end of my talk. So be sure to submit them through the GoToWebinar control panel. About 3 years ago, if not even a little bit longer, AAII started developing its own portfolio tracker to replace the one that we were using from a third-party vendor. The goal was to develop a tool that offered us greater flexibility and customization, that also integrated with the AAII website. The results of that hard work from the AAII development and technology teams was the My Portfolio tool. With this tool, users can track the stocks, mutual funds, and ETFs they own, as well as create watch lists of tickers that interest them. My Portfolio also integrates with many of the tools and data offered to A+ investor subscribers. Just because we've launched My Portfolio doesn't mean that the work has ended. My Portfolio is a living, breathing organism, if you will, that is evolving and growing based on the valuable feedback that we receive from users such as yourselves. And I look forward to the enhancements and improvements that we'll be rolling out over the next few quarters. So if you want to start using My Portfolio and you haven't yet, you can access My Portfolio from anywhere at the AAII website. You just click on the My Portfolio button at the top left of the page that's shown here on this slide. My Portfolio is a member benefit for tracking your holdings as well as any watch lists. If you haven't yet created a portfolio or a watch list using the My Portfolio tool, there's no time like the present. For newcomers to My Portfolio, you'll first be prompted by the welcome message that's shown on the left side of the slide. Here you click the Get Started Now button to create your very first My Portfolio. Now, if you've already created one or more portfolios, you can also keep adding portfolios and create new ones by clicking the Create button on the My Portfolio landing page that's shown on the right side of the slide. When you first create a portfolio, you first give it a name, and then you enter in the tickers of the stocks, mutual funds, and ETFs you want to track. The A+ ticker universe supports around 6,100 stocks. Currently, this universe includes all actively traded US stocks with current financials. In the coming months, we'll be looking to expand on this universe, so stay tuned. Our mutual fund and ETF databases come from Morningstar, which tracks around 2,500 ETFs and over 24,000 open-ended funds. The database currently does not support closed-end funds or preferred stocks, but again, we're looking into avenues to be able to allow us to expand this ticker universe in the coming months. We're also looking into the technological lift that is required to potentially allow for the importing of brokerage transaction histories to make the portfolio creation process easier. Again, we're investigating in this time, so I certainly don't want to overpromise anything, but this is one of the feedback, some of the feedback that we've received from our users, and we are trying to make the overall portfolio creation process as easy as possible. If you simply want to create a watch list of tickers and just so you have them contained, yes, sir.
Sorry to interrupt you there. Before you continue, if you go back to that previous slide, I have a question here. If there's a quick way to enter in a large number of tickers, the person has a mixed portfolio of funds and stocks. So I guess the tip you could add is that when you create a new portfolio, you could either enter these things by hand or you could copy and paste. So if you have these tickers listed in a text file, you can just go ahead and paste that into here and do a portfolio create. Is that correct?
That is correct, and actually that's a good point, and I didn't think about including it, but if the person who has that question, if someone is looking to add a large number of tickers, feel free to email me. As part of the A+ investor service, I write a weekly commentary called Making the Grade, and back probably late last year, I actually found a tool that will convert, if you can copy tickers like from a spreadsheet file or something, and automatically convert it into a comma separated list that is required for this. That makes it much easier. So yes, there are
we'll
multiple
be sure to
ways.
include that in the show notes then. So when the email goes out tomorrow, we'll include the list of the tool that Wayne's talking about. Sorry to interrupt you, Wayne. Go ahead.
Oh, no worries. So if you simply want to create a watch list, you're done once you've created your portfolio and entered in your tickers. Then you have a list of tickers that are contained. You're able to see what the daily movement is of these particular stocks, have them self-contained. However, if you want to unlock the true power of My Portfolio, such as tracking the performance of your holdings or make use of some of the A+ investor features, such as the Portfolio Analyzer, then you are going to need to enter in some additional information, including the number of shares owned and the average cost. So at a minimum, to use some of these more advanced features, you're going to have to enter in the number of shares of either a mutual fund, ETF, or stock that will then allow the system to calculate the current portfolio value, position value of the different holdings in a portfolio. So to enter this information for an individual ticker, you click on the pencil icon for the ticker at the Modify Portfolio tab. It's that little yellow highlighted section on this particular slide. And at the Modify Portfolio screen, then, you can also enter in a cash balance if you wish. You can see here below the highlighted element is that cash symbol, $ cash. So you're able to track a cash position within a portfolio. And then lastly, while My Portfolio does not allow you to track individual bonds, just because the databases for those are so disparate, the pricing and whatnot is somewhat difficult to do, you can at least enter in the value of any bond holdings that you might have in a portfolio using the $ bond ticker symbol. So if you do want to modify a transaction, you click that pencil, and that will take you then to the Modify Transactions window, which you see here. And here you can see then it shows you the ticker that you're actually modifying. And this is where you enter in any transaction data, such as the date you purchased the security, the number of shares that you purchased, the purchase price, and any commission that was associated with the transaction. Now, personally, I use the My Portfolio to track my aggregate holdings. So if I've made multiple purchases of the same ticker, I simply use the initial purchase date and then enter in my average overall cost. But you can enter in multiple transactions, track multiple lots related to the same ticker in order to get a more accurate reading of its long-term performance. This is also where if you sell a transaction, if you sell a stock, mutual fund, or ETF, you go into the modify holdings to take you to this page, and you can specify a sell transaction from the transaction type dropdown on this modify transaction screen. Once you enter in the detailed information for your holdings, you have a single location to keep track and analyze an individual portfolio. And this, you can see here, this particular table then is broken down into several subtabs. The default tab is the portfolio tab, which has on it several subtabs. The information displayed on the default snapshot tab here includes the name of the security, the ticker, the current share price, the daily dollar and percentage change in the position, the number of shares, the market value of the position, as well as the percentage weight of the holding within the overall portfolio. Clicking on a ticker for any of the stock, mutual fund, or ETFs will take you to the respective Evaluator page, where you can learn more about the individual security. Now, for me, on this particular snapshot page, probably the most important thing for me is the portfolio weightings. This is a very important and useful piece of information because it alerts me to any tickers that might have an outsized position in my overall portfolio, and thus is giving me a higher exposure to the movement of one or only a handful of securities, which can diminish the overall diversification benefits of holding multiple securities. So while, for example, as you can see here, I'm not going to complain about Tesla's success since it was added to this portfolio, it does now account for nearly a quarter of the overall portfolio, as does the Vanguard Healthcare Fund. So, this particular portfolio, I wouldn't necessarily classify it as being overly diversified. The intraday subtab includes the current share price, today's high and low prices, the daily volume, as well as the 52-week high and low. Stock and ETF data is updated intraday, but on a delayed basis throughout the active trading day, while mutual funds, which are only priced once a day, that data is updated after regular trading hours. The monthly tab shows the change in price over the last month, 3 months, as well as year to date, as well as annualized performance data over the last year, 3 years, 5 years, and 10 years, assuming that performance data is available. Now, keeping track of longer-term performance is useful when deciding whether it's time to move on from an investment. Although, at least for me personally, this isn't necessarily or ideally the sole or primary reason to sell a given security. The gain and loss since purchase tab includes the number of shares held, the cost per share, the overall market value of the position, the total cost, and unrealized gain and loss since purchase for the positions for the securities held in a given portfolio. The fundamentals tab is geared towards stock-related data, including the trailing 12-month earnings per share, the forward PE ratio, the price-to-book ratio, as well as the dividend yield. The News tab displays recent news concerning the holdings in your portfolio from our feed from Quote Media. You can filter the news displayed by individual holding, as well as the specific news source by using the various drop-down menus. I mentioned at the top of the show that a driving force behind developing the My Portfolio tool and moving this to an in-house developed service was giving us the ability to integrate it with the stock, mutual fund, and ETF data that we offer across the various AAII websites. For those of you that have navigated AAII.com in our sister sites, you know that we present ideas, stocks, mutual funds, and ETFs that are linkable to my portfolio. As you navigate the AAII website, you will see tickers with yellow plus signs next to them. These plus signs indicate that you can add this ticker to an existing My Portfolio or a watch list. Or if you prefer, you can also create a new portfolio or a watch list on the fly when you add a ticker using this step. Beyond the portfolio and watch list tracking services offered to all members with My Portfolio, there are also advanced portfolio and investment research capabilities that are features of the A+ Investor research platform. A+ Investor combines elements of financial planning, stock, mutual fund, and ETF selection and analysis, portfolio tracking, and asset allocation analysis into a one-stop shop. AAII's A+ Investor is a multifaceted online investment discovery, analysis, tracking, and planning service. It offers investors the ability to evaluate current holdings and investment ideas. It tracks and analyzes your portfolio to help you make more personalized asset allocation decisions. And it also provides portfolio insights to identify both the good and the bad within a given portfolio. Now, having a systematic, objective analytical framework is invaluable for investors to make rational investment decisions. A+ Investor subscribers can view a variety of grades across stocks, mutual funds, and ETFs from the Grades tab of My Portfolio. A+ stock grades are proprietary grades created by AAII to rate stocks on 5 different investment factors: value, growth, momentum, estimate revisions and surprises, as well as quality. The mutual fund and ETF grades allow for an apples-to-apples comparison of mutual funds within the same Morningstar category. These grades cover a variety of performance periods, as well as risk and cost measurement categories. The stock evaluator pages for the 6,100 or so common stocks in the AAII database have the 5 A+ stock grades that are accessible for all A+ Investor subscribers. For each A+ grade, you can see the values of the underlying variables used to calculate each composite score, and the grade for the value, growth, momentum, estimate revisions, and quality factors. On this slide, we see the value and growth grades for Tesla. The value grade considers the percentile ranks of a company's price to sales, price earnings, enterprise value to EBITDA, shareholder yield, price to book, and price to free cash flow ratios. The grade is based on the percentile rank of the average of all of the underlying percentile ranks for these different valuation measures. So if you're a value investor, Tesla probably doesn't check that box as far as a value-oriented stock, looking at these different values. It ranks in the 89th percentile or higher in 5 of the 6 variables, with lower rankings indicating a more attractively valued stock. Overall, Tesla has a value score of 98 out of a possible 100, which makes it ultra expensive within the A+ stock grades construct. The fund and ETF grades are also available to both AAII members as well as A+ Investor subscribers on the ETF and mutual fund evaluator pages for the funds and ETFs in the AAII universes. Here we see the grades for the Invesco Builders Emerging Markets ADR ETF. Now this ETF has posted an annualized NAV return of 18.9% over the past 5 years. Comparing this to other ETFs in Morningstar's Diversified Emerging Markets category, this particular ETF ranks in the top 20%, which is why it garners an A grade. As an investor, an important consideration is how much risk you're willing to take. This plays a pivotal role in building a portfolio that will hopefully allow you to sleep well at night while still allowing you to achieve your financial goals. By considering your capacity to accept risk, you gain a better understanding of the optimal amount of risk you can take on in order to maximize the chance that you will actually reach your financial goal. Generally speaking, the longer your time horizon, the more you can handle short-term dips or losses. It's this short-term volatility is the price that you pay for long-term gains. Over time, these bumps tend to smooth out, and investors tend to also earn a greater return for taking on more risk. Your risk capacity should play a large role in determining your risk value, your risk level. But you should also consider your overall risk tolerance, which is your ability and willingness to accept market swings. You may be willing to accept periodic declines in your portfolio of, say, perhaps 5% or 10%, knowing that this short-term weakness won't ruin your long-term returns or deep six your long-term financial goals. But how would you feel about a 40% decline in your portfolio? If the thought of such steep losses makes you uncomfortable, you may need to lower your risk tolerance or at least look at your overall asset allocation. One of the elements of my portfolio for A+ investors is the Diversification Analyzer. This analysis begins by you defining the type of investor you are based on your appetite for risk. And this can be conservative, moderate, or aggressive. These risk levels are based on AAII's asset allocation models, which encompass 3 investor personas that are based on investment time horizon as well as risk aversion. Generally speaking, the younger the investor and the longer their investing time horizon, the greater their willingness to accept risk as well as portfolio volatility. The broad asset allocation scenarios presented with these models offer a clear picture of each investor profile, showing the stock and bond allocation, risk and growth characteristics, time horizon, and suggested transition allocations. I do want to point out, though, that these are only suggested allocations, and they're only meant to serve as a guideline, because as we all know, everyone's situation differs, and no one knows for certain how markets will perform in the future. The Diversification Analyzer in my portfolio gives you a breakdown of how a single portfolio is allocated based on the number of shares you've entered for each stock, mutual fund, and ETF, plus any dollar amounts you may have entered in for both cash and bond holding positions. This information is used to tell you whether you're being too aggressive or not aggressive enough given your chosen investment profile. So for me personally, as someone who is more than 20 years away from retirement, I consider myself an aggressive investor. Based on the suggested asset allocations for an aggressive investor from AAII's asset allocation models, I appear to be overweighted in US stocks and perhaps underweighted in foreign stocks, while also somewhat underweighted in bonds. The asset allocation models allow you to see whether your asset allocation fits your appetite for risk, and also helps you to see whether you are truly as risk tolerant as you think you are. If you believe that you are an aggressive investor, but feel uneasy about only holding 10% of your portfolio in bonds, you may need to re-examine your long-term goals to see if they are too optimistic, especially if you're uncomfortable taking on sufficient enough risk to achieve those particular goals. So if I'm truly an investor looking to maximize long-term growth and have the ability to look past shorter-term market volatility, I can use the information provided by the Diversification Analyzer and use this as a sign to potentially increase my exposure to foreign stocks. Diversification is not, however, just limited to stocks, bonds, and cash. Diversifying within asset classes can help protect you against security-specific risks. But even when you hold many different investments, you may not be as diversified as you think. This can particularly occur when you hold too many stocks from one sector or invested across only a few sectors. So the sector diversification analysis that's offered by my portfolio for A+ investors looks at your individual stock holdings as well as the equity portions of both the mutual funds and ETFs that you might have entered into a portfolio. Based on this analysis, this particular portfolio is heavily weighted in consumer cyclicals as well as healthcare, and also has an above average allocation in real estate. So if I've made a conscious effort to concentrate on a few select sectors, that's fine. But if I'm someone who is trying to spread my portfolio across many sectors and not be overweighted in a particular sector, then this type of analysis will alert me to when I might have an outsized exposure to only one or a small handful of particular sectors. You can also diversify and even boost your returns by purposefully allocating beyond large cap stocks. And we can see here that the size diversification analyzer is showing that this particular portfolio is heavily weighted in large cap stocks. But I do want to point out as well as the size diversification analysis offered by my portfolio currently only considers your individual stock holdings. The Portfolio Insights tool that's also part of A+ Investor was developed to keep you in the know about your portfolio holdings and watch lists with useful and relevant information. The Insights section offers a snapshot of a given portfolio and highlights specific stocks, mutual funds, and ETFs in that portfolio. So here in this particular slide, looking at my retirement portfolio, we can see that there are 11 securities in the portfolio. One of the portfolio stock holdings passed at least one of AAII stock screens as of the close of the previous trading day. The stock holdings in this particular portfolio also have 8 individual A+ stock grades that rate a B or better. And then lastly, 5 of the funds or the ETFs in this particular portfolio have special insights that are provided in more in depth later on this page. The Stock Insights area of the Insights tab lists those stocks in the selected portfolio that are currently passing any of the 60+ AAII stock screens. Now, I find this especially useful because this is a feature that allows you to identify other stocks that might have similar characteristics of a stock that you own or are currently following. So for this particular example, we can see here that Tractor Supply Company passed the return on equity screen. So if you are someone, especially if you're looking specifically to invest in stocks that have high returns on equity, then by clicking on the return on equity screen that we see here on the Insights tab, will then show you additional stocks that are passing this screen that again might have similar characteristics that you might be interested in. To see how many mutual funds or ETFs you hold in a selected portfolio, to see how they stack up against funds in the same category, we've also created a number of ETF insights and mutual fund insights that appear at the bottom of the Insights page. In this example, one of the 2 ETFs in the selected portfolio, ADRE, has higher relative performance as well as lower fees than the typical fund in its category. Also, RSP is more volatile than the typical ETF in its category. Among the 5 mutual funds that are in this portfolio, one has exhibited strong performance relative to the category over multiple periods, and that being the Vanguard Small Cap Index Fund. And also, since I invest exclusively in Vanguard funds, it's probably not surprising that all 5 funds in this portfolio have expense ratios that are lower than the typical fund in their respective categories. Each Saturday morning, we also send out a weekly Portfolio Insights email to A+ Investor subscribers. The weekly Insights email looks at all of the portfolios you created. And that's one thing I wanted to point out is previously all of the analysis that we were looking at is based on one individual portfolio. And with my portfolio, you can actually select a default or featured portfolio that by default, all of the different analytics that we were looking at previously is related to that one specific portfolio. But the Insights email is an aggregate of all of the portfolios that you've created using My Portfolio. The email highlights the best performing stocks, mutual funds, and ETFs you track in any My Portfolio over the last week. Here we can also see how many of the A+ stock grades for the stocks in all of our portfolios that are either B or better or D or lower. We are also shown those mutual funds and ETFs that have outperformed or underperformed their category in the greatest number of years. The Insights email also shows any new additions and drop-offs for the AAII screening strategies that you may track or favorite. Lastly, the email shows the stock sector breakdown for all of the individual stocks in the equity portions of any mutual funds or ETFs that you might hold in any of your My Portfolios. So this concludes my prepared remarks for tonight's program. So let's go ahead and bring John back in and let's answer some of your questions.
Well, yeah, great presentation, good overview. We've got a lot of good questions coming in here, Wayne. And I'll start off with perhaps, I'm not sure if it's an easy one or tough one, but how secure is the site? I got a number of questions with members asking about security and information, that's being stored.
Well, AAII is blessed to have Nick Powell, who is our oversees our technology department, and Nick is obsessed with security, and he and our technology team have created a website that even if someone were able to access, which it has very high security protocols, but even if anyone was able to access any individual portfolios, there's absolutely no way for them to be able to track that back to actually who that portfolio is. So for example, the portfolios that you were looking at, someone might be able to see that, this particular portfolio holds, Tesla, Tractor Supply, the Vanguard Healthcare Fund, et cetera, but there's no way for them to be able to track that back and associate that with Wayne Thorp. So the data that's on our website is highly secured, and we have a staff that is obsessed with security and doing everything in its power to make sure that it stays secure.
And on top of that, you're connected with it's just a little key is the lock is shown when you're connected to the website, so information is being transmitted securely as well. So you're not just doing open protocols and whatnot. Thank you. In terms of a member here is a subscriber to VMQ and is using the portfolio tracker on that site. The question is, how similar are the two systems? I think the same, right?
Yes, the overall structure is the same. Actually, we use the VMQ portfolio tracker as sort of an alpha and beta testing platform before we rolled the My Portfolio out to overall membership. So the two are, as far as functionality, are the same. And actually, if you are a VMQ subscriber within My Portfolio, you don't have to be at the VMQ site, but there are actually some additional data tabs that are unique and exclusive for VMQ subscribers within My Portfolio.
Very good. And a question here in terms of, is there a way to see, if a company that he has any news without entering the particular ticker into the portfolio?
Absolutely. Let's see here. If you can bear with me, let's go live. The question is, can people see?
Sorry, Wayne, right now we're just seeing a blue screen.
How about now?
There we go. Now we see the browser.
Okay, if I get my mouse back. So let's say, for example, so we have this ticker search at the top left of all of the AAII web pages. And so, whether you're just a regular member, subscribe to a premium product, anything like that, you can enter in a ticker, and that will then pull up a data page for that particular stock. And on this page, we have a news and events where you can pull up news related to that particular ticker.
And
So
I apologize. I somehow managed to hide my questions panel. I docked it and hid it. I don't see the questions anymore. I wrote a couple down. So I've got a couple of questions that have come in as far as the ability to track certain securities, closed-end funds, options, and that can't be done right now. Are there any plans to change that?
I know I will speak. We have gotten we get this feedback, and I'll actually be talking about feedback a little bit later. And yes, we are conscious of the fact that there is a demand for closed-end funds, some preferred stocks, additional ADRs, Canadian stocks. We are looking into, we have a data contract with Refinitiv, formerly Thomson Reuters. Very large, reputable data provider. So we are looking into avenues to be able to expand our ticker universe. We also have a data feed from Quote Media, which a lot of the page, like the data you're seeing on this page here, comes from Quote Media. And we are also looking into the possibility of actually using that particular universe as sort of the superset of companies. So yes, we are looking into avenues to be able to expand on our overall ticker universe to make my portfolio even more comprehensive.
And I believe you talked about this in your presentation, but just to confirm, I have a couple questions here. How often are the prices for stocks, ETFs, and funds updated?
So stock and ETF data is updated throughout the course of the trading day on a delayed basis. It's probably 15 to 20 minute delayed. But mutual fund data, which mutual funds are only priced out once a day after the trading is closed for the day, mutual fund data then is updated on a daily basis after regular trading is ended. It's normally updated probably early morning the next day.
In terms of being able to take more than one portfolio and combining it into multiple portfolios, is that something that can be done now, or is that something that's planned for the future?
As of right now, like the diversification analyzer, all of those types of things, that is focuses on whatever portfolio you've selected. So at this point, it's one portfolio. We have looked at different times into offering the ability to specify, and that's something that's definitely on a wish list. But as far as being able to allocate finite resources, we actually discovered that the vast majority of the people that use my portfolio actually only have one portfolio. But so doesn't appear to be a overwhelming demand of allowing people to specify. If they have 10 portfolios, I want to analyze all 10 or only 3 of the 10 or something like that. But that is definitely on a future enhancements list for us to tackle at some point.
In terms of the ability to track closed positions, I know that you have the ability to track positions and it'll calculate the average cost basis. Is there a report to show the closed positions?
I do not believe so, but I'm not 100% sure. That's something I can look into, and we can either insert it into the show notes, or whomever posed that question, feel free to follow up with me directly at wayne@aai.com. But I don't believe that there is a way to track closed positions.
Very good. After you create a new portfolio, is there ability to download any of the information to an Excel or CVS file?
At this point, we don't have exporting capabilities, but that is also on a wish list to be able to export like the different data tables that we were showing as we were going through my portfolio, offering the ability to export that. But currently that functionality is not available.
Very good. And what's the maximum number of either portfolios or stocks that can be entered? Do you know that offhand?
I believe Members have the ability, I want to say it's 20 or 25 portfolios with, I think it's 50 stocks per. I think A+ subscribers might have, it's either 50 or 100 with 50 stocks per portfolio. But I can definitely confirm that. So again, if someone wants to pose that question, we can look at that up and add that to the show notes as well.
Sure thing. And then if a member enters information into their portfolio, is there any way that they can be viewed by the association or consolidated to give a look at what the members are doing as a whole?
Yes, we again, it's anonymous, but we can, and I believe it's being able to track, ticker lookups, things like that. I wrote an article back around. I've written a couple articles from Making the Grade as far as the stocks that are most heavily tracked or those that are entered in most within a given portfolio. So we are able to look at some aggregate statistics related to that, and we actually have kicked around some ways in which we can use that data, as heat maps or something like that.
We have a number of people asking about the how to subscribe to the Portfolio Insights email. If you could maybe give us a little color on that, Wayne.
Let's see here. If I'm not mistaken, that is an opt-in email. So if you are an A+ investor subscriber and have created a portfolio, you should get that email by default. It's an opt-out email. It's not an opt-in email. So A, you have to be an A+ investor subscriber, and B, you have to have created at least one portfolio to get that email.
Okay, thank you.
And in terms of, just to help members who aren't A+ subscribers, can you summarize briefly what tools you can make use of as a member without having to have the A+ subscription?
You have access to the portfolio tracking and watch list tracking, so you can create portfolios of holdings that you actually own or watch lists that you track, sort of just idea stocks or whatnot. You also have the ability, if you find a particular ticker through any of the idea generators that we offer at our website, you can then also add tickers to those portfolios as well.
And then how do you determine average cost? I know it's kind of a technical question there.
Average cost is it's the total cost of, so if let's say you purchase 3 individual lots of a given stock, and so it's the average price, it's the total of the price that you paid, including if you put in there any commissions, and then you divide into that the total number of shares that were purchased across those lots as well.
And a member is asking here, how much does it cost to be an A+ subscriber?
It is $149 a year. But if I'm not mistaken, if you're not an A+ investor subscriber, you will probably be getting a follow-up email with some information as far as being able to access the video of this as well as the show notes. And I do believe that there will be a special offer for non A+ and subscribers in that email tomorrow.
And then I have a member who wants a little bit of clarification on when it comes to stocks. Do you want a value grade to be low, to be good, versus a momentum grade? And I guess perhaps there's some confusion between the term grades and scores. So maybe you could just spend a few minutes. I don't know if you want to bring up a stock, if you have one handy, and just kind of explain, that whether or not A grades are good or F grades are bad, and whether or not low scores are good or high scores are good in what scenario. And if you have, if not, we could just talk about it. Sorry, but we have some on your slide to describe that.
No worries. Assuming that we can, here we go. So value grades, yes, and we kick this back and forth, and it's one thing for us internally to think it might work, but then it might difference in how it's interpreted by other people. But for the value grades, a lower grade, a lower score is preferable. So you have underlying variables for all of the different factor grades that we have, and those are all based on percentile ranks of the individual underlying variables. In the case of a value grade, a more attractive stock is going to have scores that are the percentile ranks that are low. A low score indicates, all else equal, that this is a more attractively valued stock. So for example, the value grade, again, is based on price to sales, price earnings ratio, enterprise value to EBITDA, shareholder yield, price to book, and price to free cash flow. And looking at Pulte Homes, we can see that its price to sales ratio of 1.15 ranks in the 26th percentile. Its PE ratio of 9.1 ranks in the 11th percentile, et cetera, et cetera. We then create a simple average, an equal weighted average across these 6 metrics that make up the value grade to come up with an average grade. And then that average is re-ranked to arrive at the overall value score. So in the case of Pulte Homes, averaging all of these percentile ranks, then re-ranking that average, its value score ranks is 10. So it ranks in the bottom 10% of the stock universe. So that's considered to be very deep value. And since it's in the 0 to 20 range, that then results in the A grade, A value grade. So scores are the raw percentile rank that then is translated into a letter grade.
So when it comes to like value, it's an equal breakdown. Basically the same, 20% have an A, 20% have an F, and there's also a certain number of NAs. So if someone is doing an analysis and is seeing a lot of Fs, they're probably looking at stocks that have relatively high valuations. So they're more than likely a momentum investor. Is that or they're investing in higher priced securities? Is that a fair statement?
That is correct, yes. And actually, I don't want to get into want to stay sort of with this, but we have an A+ stock grades screener that A+ investors can run screens based on our different stock grades. And this just shows you the distribution of the grades across the value, growth, momentum, revisions, and quality. And the value score with that re-ranking results in your relatively equal distributions across the A, B, C, D, and F. Whereas, these like growth, the estimate revisions, those are not re-ranked, and these are based on just on the averages. So that's where you get more of a bell curve distribution.
And I'm getting quite a few questions on printing their portfolio holdings. What's the best way for a member to go ahead and print information on their holdings? There's quite a few portfolios there, Wayne, I could see.
Do a lot of portfolio creating. So actually, when it comes to printing, and that actually creating a printer-friendly option is on a future to do. But it actually is relatively printer-friendly when you try to just do the standard print within your web browser. Everything fits on a single tab, so just being able to print the actual web page itself does a pretty good job of doing that. But again, we're conscious of the request and the convenience of being able to either have export this as a PDF, export it into Excel, or having a true printer-friendly version of this is something that we are aware of and have it on a future to do in enhancement.
Excellent, thank you. And just in terms of like someone here wants to know how to, is there a way to, what's the easiest way to put a portfolio together or list a portfolio that kind of follows the holdings of the shadow stock portfolio?
So let's see here.
So probably in that case, they would have to probably just have all the tickers and copy them in. Might use that tool you have, right? That you're going to point out. Why don't you tell people who came in late? There's a tool you're aware of that allows people to basically create a special file, correct?
That's correct. So actually, actually might even, if I have the opportunity, I might do a little tutorial using the shadow stock portfolio, because we have the actual model shadow stock portfolio, which is exportable as in Excel. So you can actually open up the spreadsheet that we provide for the shadow stock portfolio, which no one can probably see this, can they?
I can see that. I saw that Excel sheet for a moment there.
Okay, excellent. Can you see the Excel spreadsheet?
Yes.
Okay. So yes. So this is a spreadsheet of the actual holdings and the AAII model shadow stock portfolio, and using that tool, you could copy the. Of course, you have to enable editing because it's read only. But yeah, that tool that I'll mention is you then would be able to copy the tickers from this, and then you go to it's a web page that you basically would paste this into it and would convert it into a comma separated list that then you would copy into the my portfolio, create new portfolio mass ticker entry window. So there is a way to do it, and yes, we will include that information in the show notes for tomorrow.
Thank you. And in terms of short positions, can a member track short positions?
At this point, no. It is long only positions, and there's some additional, dividends, short positions, things like that. There's probably some additional transaction types that we could include in the future, but at this point in time, it's long only portfolios.
Thank you. And as a reminder, I've got a couple questions here that just coming in, but this webinar is being recorded, and so yes, we'll send out a link to everybody who signed up, and you'll be able to view this webinar again in the future. So if any of the tips that Wayne is providing here, you could watch again at your leisure. In terms of diversification analysis that you have, Wayne, any tips or thoughts as far as how a member can make use of that?
Well, I mean, there's multiple ways you can do it. It's the ability to, it's sort of, I always refer to it as sort of know thyself. And so by specifying whether or not you're a conservative, a moderate, or an aggressive investor, you're starting with that, and you get those allocations suggested being the optimal word, suggested allocations based on the AAII asset allocation models. So that's a really good indication. How well do you know yourself, or are you telling the truth when you're talking about the level of risk that you're able to assume or tolerate? I know everyone probably thinks, hey, I'm tough, I can be an aggressive investor. But again, as I alluded to, the aggressive asset allocation suggests only having a 10% allocation to bonds, and I know a lot of our members probably are weighted significantly higher than that, than 10%. So if that's an allocation that makes you feel queasy, then you need to readjust what your risk tolerances are. Make sure that you have a portfolio that matches that. But then that also means you're probably going to be limiting somewhat your high end of your overall performance. And you need to take into account then whether or not that might have a negative impact on your ability to achieve some of your long-term goals. But then, beyond that, I've met a lot of people that, hey, I'm diversified, I own mutual funds. It's like, well, depending on the mutual funds that you are invested in, if you don't crack open the hood and really take a look at the individual allocations within a mutual fund, you might find that you might have an outside exposure to individual stocks. So the sector diversification is extremely useful, as well as to making sure that you aren't unwittingly overexposed to individual sectors or industries. Especially right now with what's been going on with the NASDAQ and technology stocks. If you were unwitting, depending on whether the mutual funds that you were invested in or ETFs, you might not have been aware you could have had an outsized exposure to technology. And you see the S&P 500 doing reasonably well. You see the Dow Jones hitting new highs, but we've seen now a 10+% correction in the NASDAQ over the last couple of weeks. And you're like, whoa, what's going on in my portfolio? And you might not be aware that you have an outsized exposure to technology. So those are definitely a couple of ways that the diversification analyzer can really be useful for investors.
And we're getting close to the end of our time, so I only have time for 2 more questions here. What's the best way to adjust for splits?
So the best way to adjust for splits is that is a manual adjustment, and that's another potential transaction that we could look to be able to handle going forward. So if let's say, for example, it's a 2-for-1 stock split. So there's 2 adjustments you'd have to do. You'd have to go in and modify a transaction using the modify transaction tool. So if it's a 2-for-1 split, you would basically have to cut in half what your average purchase price is, as well as then double up the number of shares that you hold. So it is a manual adjustment. So a 3-for-1 split was then you divide your average cost by 3, and then multiply your number of shares held by 3. But those are manual adjustments at this point in time within my portfolio.
Well, thank you. And I've got actually two comments, not so much questions for you, Wayne, but Joe and William have both said that they really appreciate the effort you're doing and they're applauding your work, and they think that they're really enjoying using the My Portfolio tracker, and they said keep up the good work. So I just wanted to pass that on to you, Wayne.
Well, thank you very much. I appreciate those comments. It's been a group effort. We spend that's one thing I love about working at AAII. It's very collaborative. We've got some great minds. We have a lot of unique insights, and what's come about with A+ Investor in my portfolio definitely has been a group effort, and so I couldn't have done it without a lot of different people. But it's always great to hear those comments. So thank you.
Thank you, Wayne. And Ryan may have some closing comments for us as far as upcoming webinars and shows.
Yes, actually, let me do Ryan a favor. Let's go ahead and. Oh, actually, before we go, I just want to touch on one thing. Periodically we send out surveys to members as well as subscribers to our premium products. And I'd be the first person to admit that I get way too many emails. So a lot of times they get lost as just another email from AAII. But these surveys are invaluable, especially to me as someone who's looking to enhance and build out new products. They're very short surveys, probably take 30 seconds ultimately to answer them. There's some open-ended questions after the initial question if you so choose to do so. But you taking the time to fill out those surveys, we do look at them. Actually, we had a meeting this morning reviewing some of these survey results. We do look at them, we do use them. So any feedback you provide, either in that or reach out to me directly, again at wayne@aai.com. Constructive is always the preferred way, but I have a thick skin. But any feedback you can provide to help us help you is invaluable. So with that, I'm going to pitch it back to Ryan. But let me just say, everyone, thank you for attending this evening. Stay safe and stay healthy. And Ryan, take it away.
Sure, absolutely. So just want to remind everybody that we do these webinars every Wednesday, 7:30 Central, 8:30 Eastern. You can register for upcoming webinars and check out the full schedule as well as our full archive of content, AAII.com/webinars. Next week, we have an episode of the Individual Investor Show. We're going to be talking about the first cut lists of the dividend aristocrats, international funds, and rebalancing your asset allocation. Don't miss that next week, 7:30 Central. I'm hosting. And then the following week, on the 24th, we have a very special webinar. We're going to be joined by Liz Ann Saunders, who's the Charles Schwab strategist. She's going to be talking about what's in store for the U.S. markets and economy in this coming year. So yeah, don't miss that. That'll be March 24th, 7:30 Central, fireside chat on recent economic trends and market developments. With that, I wish everybody very, very good health and good wealth. And thank you for joining us. And we will check you next time. Good night.
Thank you. Good night.
Good night.